Only a week to PDAC. It is March 2nd to 5th, so we are on the verge. And of course, February ends on the 28th, as we all know. So an institution of sorts in the mining and natural resources calendar in Canada, but also internationally, the Prospectors and Developers Association of Canada has their massive conference in Toronto, often called the world's largest mining conference, which we celebrate here at the Northern Miner as we approach 110 years here, so all sorts of notable dates. Check out our YouTube. You can find Northern Miner Group President Anthony Vaccaro. There it is, celebrating 110 years of the Northern Miner. So there's a little video there. Feel free to check it out, and we also host the podcast there. So hello and welcome to the Northern Miner podcast. My name's Adrian Pocobelli. As usual, there is an absolute ton to get through. And it's quite interesting. I mean, here I meditate since 2012, focusing on this beat. You know what I love about this beat of mining and natural resources and metals and minerals? There's something kind of irreducible to a certain degree about it. It is in a world of hyper-real mass media narrative. There's something concrete about real physical metal. It is unambiguously real. And what I love about that is in a world of narratives and agendas and people wanting you to think this and people wanting you to think that, and this news organization says this news organization says that, the metal is the metal. It kind of creates a bit of an anchor to all of these stories that are flying back and forth on what is happening out there. So as I like to call it here, it's like this irreducible foundational layer of the global news narrative, you know, whether anybody likes it or not. And that's what's kind of beautiful about it. It's just what it is. It's just what is. So it's kind of fun. And of course, these minerals kind of playing a pretty crucial role in that supply chain. They may be at the very beginning. And, you know, if I sound triumphant, it's because I've been there 10 years ago when CEOs were showing up at mining conferences apologetically saying, you know, my daughter doesn't like what I do because I'm in the mineral resource extraction business. 10 years later, I hope that the sentiment is improving and that we're all starting to feel a little bit better of the crucial fundamental role that this industry plays in society and is not simply made of profiteers trying to devastate the environment at everyone else's expense so that they can fill their bags full of gold. So with that, I hope everybody has a wonderful conference who is attending. The Northern Miner, as ever, will have a booth, and there will be a complimentary, gigantic Northern Miner PDAC-themed issue that will be sent across the conference. So editors and writers have been hard at work preparing that for you, so do check it out. Now, speaking of gold, we have some pretty interesting news. We have another record. I hesitate to open the program with it now because I feel like you're going to think it was last week's episode, because it seems every week we have a new record. Now, according to Reuters, spot gold hit a record high of $2,956.15. If you go to CNBC, you'll see that it seems to have hit $2,963.20, but you get the picture. We're talking, you know, give or take $2,960 on the gold price. I mean, this is only $40 away from the landmark $3,000, quite interestingly. So let me actually just read a couple of lines here from this Reuters article as to why. Gold prices surged to a record high on Monday, so yesterday, driven by safe haven demand amid concerns over U.S. President Donald Trump's tariff plans, with additional support coming from inflows into the world's top gold-backed exchange-traded fund. So spot gold rose 0.4% to $2,947.48 an ounce. U.S. gold futures settled at $2,963.20. So maybe that is the disparity I am seeing between CNBC and Reuters, is perhaps the spot versus the futures price. And there are all sorts of interesting stories going on in gold right now. You probably heard about it. This auditing they want to do of Fort Knox. So here is the story If you haven't heard it, Trump says he will check amount of gold stored at Fort Knox. This came out during a press conference. This is Bloomberg News via mining.com. President Donald Trump said his administration intends to ensure that the significant amount of U.S. gold reserves held at Fort Knox is accounted for and accurate. Quote, we hope everything's fine with Fort Knox, but we're going to go to Fort Knox, the favorite Fort Knox, to make sure the gold is there, end quote, Trump told reporters aboard Air Force One on Wednesday en route to Washington from an event in Miami. Quote, if the gold isn't there, we're going to be very upset, end quote. So that should be entertaining. Either this will put to bed the calls that Fort Knox is empty, or it will be verified that there's maybe not the gold that is claimed to be there. So it's a pretty interesting story. I want to invite Jeffrey Christian back. We had him on recently, and he put out a video on this as well. I'm kind of waiting to find out if we get a date, because it would be awesome to have him on like the week after, perhaps. But let's see how it all plays out. Maybe it'll be in months, and we'll have to have Jeff on much sooner than that. So interesting development there. Also on the gold front, we've been following Barrick Gold in Mali. There has been a significant development here. This is an exclusive from Reuters. Barrick Gold signs agreement with Mali to end mining dispute. This is February 19th. Canadian miner Barrick Gold has signed a new agreement with the Malian government to end an almost 2-year dispute over its mining assets in the West African country. 4 people familiar with the development told Reuters on Wednesday. Barrick has signed an agreement, and it is now up to Mali's government to formally approve the deal, the sources told Reuters. An official announcement could come as early as Thursday. Another source said that though a deal was close, last-minute hurdles could still derail it. One would imagine. And here are the details, according to this exclusive report from Reuters. As part of the new agreement, Barrick will pay a total of $438 million to the Mali government in return for the release of detained employees, seized gold, and restarting the operations at the Loulo-Gounkoto mine. Now, the Mali government has been saying, I believe it was $500 million after they put out the arrest warrant for Mark Bristow, the CEO of Barrick Gold. It kind of looks like capitulation to a certain degree from Barrick. At the same time, I'm not sure you can really blame them. I mean, there are detained employees who seem to be unjustly held. There are all the employees and the jobs, but I guess my, question here is, what is to stop Mali from doing this again? There is a sense of arbitrariness that seems to be occurring here, and the next time, will they just take more employees and you're back where you started? So interesting development there. Now, as mentioned in the opening article on the gold record on tariffs, there is a story from CNBC yesterday. This headline here, Trump says tariffs on Canada and Mexico, quote, will go forward, end quote. And here it says President Donald Trump said sweeping U.S. tariffs on imports from Canada and Mexico, quote, will go forward, end quote, when a month-long delay on their implementation expires next week. Quote, the tariffs are going forward on time, on schedule, end quote, Trump said when asked if the postponed tariffs would soon go back into effect. And scrolling down a bit, the president claimed that the U.S. had, quote, been taken advantage of, end quote, by foreign nations on, quote, just about everything, end quote, and reiterated his plan to impose so-called reciprocal tariffs. Quote, so the tariffs will go forward, yes, and we're going to make up a lot of territory, end quote, Trump said. Like if I was supply management, which is, as far as I understand, the association that basically protects Canadian dairy, cheese, milk, etc. If I was supply management, I'd probably be starting to get concerned about this situation because I suspect they are at the top of the list as far as these negotiations are concerned from the American side. Continuing on, Rio Tinto CEO goes to Washington to get handle on Trump tariffs. So we have world leaders. Macron just arrived yesterday at the White House. Now we have Rio Tinto. What was it last week? The Ford CEO going to Washington. Rio Tinto CEO goes to Washington to get handle on Trump tariffs. This is Bloomberg News via mining.com. And here's a quote from Jacob Stousholm, CEO of Rio Tinto. Quote, I'm here in Washington, D.C. because I want to understand what the new government wants to achieve for America. End quote. Stousholm said in an interview from the company's offices. He said he's not asking anything of the administration, but noted that, quote, policies are being formulated by the day, end quote. Of course, if you want a methodical analysis of the tariff discussion, particularly between the U.S. and Canada, feel free to go to last week's show, a fascinating interview with Clifford Sosnoy of Fasken. Another headline on the tariff front, Cameco sees uranium costs jump up for U.S. customers if Trump's tariffs go into play. This is Reuters via mining.com. So we heard from Grant Isaac, chief financial officer at Cameco, who said, quote, a 10% proposed tariff from a major supply source like Canada will effectively raise the uranium price by 10% because if you think about it, U.S. domestic demand is inelastic for contracted volumes, end quote. Finally, he said, quote, I think the U.S. puts these threats out at the peril to the security of their supply, which then goes back to my original point that this isn't very consistent with an energy dominant strategy, end quote, Isaac added. There is a theory out there that, Trump, along with, advisor, shall we call him, Elon Musk, are trying to pull a Javier Milei, where you take all the pain at the beginning and then you basically pray that it works. It did seem to work to a certain degree for Javier Milei. So one wonders from a strategic point of view if that is indeed occurring. Another headline here relating to the tariffs, Nutrien says tariffs will lead to higher costs for U.S. farmers. This is Reuters via mining.com. And here is a quote from Nutrien CEO Ken Seitz, who said during a post-earnings conference call, quote, frankly, costs of this tariff will be borne by the U.S. farmers. The U.S. farmers will likely feel the impact after the spring planting season, end quote. So we were mentioning the potash effect on farmers a few weeks ago. So that is back. Continuing on, an update on President Trump's play for Ukraine's mineral resources. Here's a headline from Bloomberg News via mining.com. Ukraine-U.S. closing in on deal over nation's mineral resources. Ukraine is in the final stages of talks with the U.S. over a deal to give Washington a cut of the country's natural mineral resources, Deputy Prime Minister Ola Stefanishina said on Monday. Both sides have been locked in intense negotiations over the agreement that U.S. President Donald Trump's administration sees as integral to its plan to broker a ceasefire in Russia's 3-year war on Ukraine. And here is the tweet from Olga Stefanishina on X. Ukrainian and U.S. teams are in the final stages of negotiations regarding the minerals agreement. The negotiations have been very constructive with nearly all key details finalized. We are committed to completing this swiftly to proceed with its signature. We hope both U.S. and UA leaders might sign and endorse it in Washington the soonest to showcase our commitment for decades to come. And here's another headline. Putin outlines potential aluminum rare earths deal with the U.S. This is Reuters via mining.com. Russian President Vladimir Putin offered the U.S. the opportunity for joint exploration of the country's rare earth metals deposits as well as the supply of aluminum to the U.S. domestic market under a future economic deal. So this is quite interesting, just purely from a geopolitical perspective. The theory is that President Trump, by reaching out to Russia and creating minerals deals, is somehow trying to peel Russia away from China. So if you're wondering to yourself what might be happening here, that is a theory. As it says here, U.S. President Donald Trump earlier said that, quote, major economic development transactions with Russia, end quote, would take place. Within 2 hours of Trump's statement, Putin chaired a meeting with his ministers and economic advisors on rare earth metals. And here's the quote from Vladimir Putin. Quote, we, by the way, would be ready to offer joint projects with our American partners, and when I say partners, I mean not only administrative and governmental structures, but also companies, if they showed interest in joint work, end quote. He added, quote, we have, I want to emphasize, significantly more resources of this kind than Ukraine, end quote. Scrolling down a bit, Putin noted that Russian companies could also supply up to 2 million tons of aluminum to the U.S. market annually if the U.S. market reopens. Russia used to provide up to 15% of U.S. aluminum imports before prohibitive duties were introduced in 2023. Putin said, quote, the Russian aluminum supplies will not significantly affect price formation. However, in my opinion, it would still have a restraining influence on prices, end quote. So another interesting development again in this, I don't think it's technically mercenary, but we're moving towards a mercenary direction here. We have another development. And here's the headline, Cecilia Jamasmy, editor-in-chief of mining.com. Congo offers U.S. Europe minerals in exchange for peace. And again, you think of Machiavelli. Once you invite those armies into your country, they can be hard to get rid of. But maybe the DRC wants that. It is surprising to me how little help the DRC seems to have gotten when the general consensus is that Rwanda is backing the M23. But maybe it's just the mood of the times right now where there's just not an appetite, perhaps, for intervention in foreign conflicts. Let's look at the article. In a bold diplomatic move, Democratic Republic of Congo President Félix Tshisekedi has reportedly proposed granting the United States and Europe access to the country's vast mineral resources on the condition that they intervene to end the ongoing conflict ravaging the nation. And you have to wonder, again, we're kind of back to China. What does China think of all this, one wonders? Speaking on Sunday, presidential spokesperson Tina Salama urged the U.S. to, quote, directly buy critical minerals, end quote, from Kinshasa rather than sourcing, quote, looted and smuggled, end quote, resources through Rwanda. She extended the same appeal to Europe and other buyers, emphasizing that the DRC is the, quote, true owner, end quote, of these valuable commodities. Salama was reacting to an interview with Tshisekedi published by the New York Times over the weekend, in which he was quoted as saying that he did not rule out a potential minerals deal. Tshisekedi said that an agreement would bring, quote, much more security and stability, end quote, to his country. He also revealed that the Trump administration had previously expressed interest in securing a direct supply of strategic minerals from Congo. And here is a tweet from Tina Salama, quote, setting the record straight. President Tshisekedi invites the USA, whose companies source strategic raw materials from Rwanda, materials that are looted from the DRC and smuggled to Rwanda while our populations are massacred, to purchase them directly from us, the rightful owners. Now, meanwhile, we have these two other headlines that have appeared this week. China's Norinco sweetens bid for Congo copper mines as deal stalls. And it says here, China North Industries, known as Norinco, has offered to adjust its offer to buy copper and cobalt assets owned by Chemaf SA by raising the Congo government's stake to smooth the path to a deal, two sources familiar with the matter told Reuters. The $1.4 billion bid made by the Chinese defense and industrial giant in June stalled after Congo state miner Jeka Mines submitted its own unsolicited bid for the Chemaf assets, deepening a standoff that has been complicated by U.S. officials lobbying against China's grip on the mineral-rich Central African copper belt. So they have sweetened the deal. Interestingly, China North Industry, or Norinco, being referred to as a defense and industrial giant. And finally, we have a column from Reuters, Congo emerges as China's strategic copper supplier. And as it says here, China is reaping the rewards of its massive mining investment in the DRC in the form of surging imports of physical copper. Shipments of refined copper from the Central African country jumped by 71% year-on-year to 1.48 million metric tons in 2024. The Congo is now, by some margin, the largest supplier of refined metal to the world's largest buyer. And there is quite a stark chart here, and you can find it on mining.com, where you see Chile's imports declining pretty dramatically since 2022, and you see an upward trend from the DRC into China of imports of copper from really 2018 to now. So in a weird way, you could say that the DRC is replacing Chile in terms of copper imports into China. So pretty interesting development there when you consider how important copper is, how huge. So coming up this episode, we have Jocelyn Douheret for the Ministry of Natural Resources and Forests for the Government of Quebec, as well as Jonathan Lafontaine, who is Strategic Advisor for the Ministry of Natural Resources and Forests at the Government of Quebec. They discuss Quebec's mining policy and the strategy that the ministry had since 2020 and how it has worked out and what they plan to do 5 years later in 2025, looking ahead with everything that they've learned in the process. It is absolutely fascinating to hear from Jocelyn Douheret and Jonathan Lafontaine on how Quebec continues to show innovation on mining policy in North America and really in the Western world. Also coming up, we have Graham Grant of Sequent on this week's Spotlight, who discusses the company's new software, which Graham is calling a kind of operating system for mining companies. Super interesting developments there on how to really just connect all the information and make everything more efficient in terms of operations. So that is coming up on this week's Spotlight. So a fascinating episode ahead of us today. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Apple Podcasts, SoundCloud, and Spotify. And with that, let's turn to Graham Grant, Chief Executive Officer at Sequent, for this week's Spotlight. Joining us today, I'm very pleased to welcome to this week's Spotlight, Graham Grant, CEO of Sequent. Graham, welcome to the show.
Thank you, Adrian. It's great to be on.
It's great to have you, Graham. So for those that are unfamiliar with Sequent, what is the company Sequent doing? Can you give us a little bit of background on the company?
So Sequent is a geosciences software company that really is all about dedicating to help people understand the underground. To give you a sense of our history and scale, founded 20 years ago. We're now a team of about 800 around the world. We have 7,500 customers, and we have the world's largest mining customers as part of our portfolio. We are really leaders in tech innovation. Now, for those not so close to our name, Sequent, you may well know the geological modeling product Leapfrog, which turned the industry on its head 20 years ago. And we work across multiple industries, very unusual in that respect, in that we're in mining, energy and civil infrastructure, environmental and water. But as it relates to mining, we have a very forward-thinking innovation program. And what we're doing this year is bringing to market what I would describe as a new operating system for the mining industry.
So very interesting. So you had a big product that you brought online already, and now you have a new one. So ultimately, what problems is Sequent trying to solve for the mining industry now in 2025?
I think there's two problems we could summarize, if you will. One is the industry problem that mining industry writ large faces, and the second is one of innovation in our space. Really, the pressure on mining executives is coming in from all sides. Geopolitical upheaval, pressure to increase production, structural increases in operating costs far beyond inflation, compliance, regulatory cost. And oh, by the way, shareholders want a tremendous return in the short term on what is a very long-term industry. How do you resolve on all of that complexity? I think you've been commenting in your podcasts, early 25 is like a period we've never seen. How does a business respond to those sets of changes? And we think one response is to ensure your organization is agile and resilient and able to adapt. And as it relates to technology, our role is to bring that level of adaptability and capability so companies can evolve quickly. And this is what we are bringing to market, which is, if you like, a new operating system which enables them to quickly reconfigure and unlock new value.
So it seems you're focused mostly on the software. So tell me, what are the big challenges that the mining industry is facing from an innovation perspective?
If we think about innovation within mining, you can look at the long arc, and we think about operations and operating mines versus the geosciences and discovery and exploration and resource definition. Innovation started downstream. It started where the cash is spent in large-scale operations and large capital. So truck automation, as an example, started, I think, almost 30 years ago this year. And that was 20 years before Tesla introduced autopilot in their cars. So, mining's been on this innovation in the operations for a long, long time. And the robotics and automation journey has been driven by efficiency and cost of processing. But upstream in the geosciences, which is where you're trying to wrestle with uncertainty, there has not been that same innovation. And there's been, I think, three reasons for that. First reason is that the early software was developed from inside the industry, and that very rarely leads to transformative breakthrough. We were different. We jumped over from medical sciences, and the impact on the mining industry was profound. The second reason, I think, is that some technology companies these days really are consolidators. So they're acquiring those older technology companies and basically running them for profit. And that's great for the shareholders, but it throws a wet blanket over innovative thinking. And I think the third reason is that upstream in this subsurface geosciences area, the market size is actually quite small and very niche, and it's too small to attract, I describe the serious innovation venture capital. So we've tended to have seen that get left to the universities and industry. So your mining in that respect has some very, unique structural problems to other industries. And so that's why we've chosen to focus our attention on innovating, inside this space of the mining industry.
In terms of that, then, what does that look like in practical terms? Like, how is Sequent helping mining companies improve in this regard?
So I mentioned about the older software. So the industry upstream is littered with what I would describe as legacy software. That's software built many, many years ago, or founded many years ago, that approached technology like a walled garden. So you had to work within that technology. So it was a walled garden. It had often proprietary data formats. And these different pieces of software just didn't talk to each other, which is completely nuts in a modern world, 2025. And that effectively forced mining companies to become, in a sense, tech companies to integrate this legacy spaghetti. And mining companies, they want to be great mining companies. They don't want to be reluctant tech companies. So if I could picture this, if you could imagine wanting to build a chart or a pivot table in Excel and you simply couldn't get the data in, like that would be unthinkable. But it's like parts of this upstream industry are stuck in this old paradigm. Now, at Sequent, we're swimming in completely the opposite direction. So we're pursuing openness, we're pursuing open source, unlocking data, formats that are accessible, connecting things together, and also enabling other emerging tech companies who need access to this data, who need access to market. And we're putting the power back in the hands of customers, because ultimately it's their data, it's their mine operations, and we need to enable them and give them the freedom to operate. And what we call that is Evo. It's a very advanced and modern ecosystem that encourages connection and openness and automation, and it's going to change how mining companies run. And that's what we're discussing at PDAC this year.
And what is the booth number for people that are interested?
829 is our booth.
Booth 829. Okay, excellent. And is this meant for larger companies? Is this also meant for smaller companies? In a sense, what kind of people could this help?
It's across the spectrum and to technology companies. By that, I mean the largest mining companies have, in a sense, the largest problem because they've got all of this legacy technology stack that's not integrated properly or is difficult to adapt and evolve into efficient workflows. For the smaller firms, they lack the buying power and maybe reach. And so, being a cloud native modern system that's built on, modern ecosystem principles, access and adoption is very straightforward. But also it's powerful for the emergent technology companies. So those new breakthrough innovators who want to bring new approaches to market, it gives them the ability to lock onto a technology that they would understand, which is, modern APIs, to use the terminology, modern object schemas, compute environments, which are, high performant and those sorts of things.
How hard would something like this be to implement? I think sometimes we think, oh, new software, uh-oh. How challenging would this be to, integrate into a company organization?
Often the difficulty in these things is the scale to which you want to implement and deploy. But, these things are highly componentized. So we've been in a limited availability program with some very large mining organizations, and they've been able to jump on and spin up extremely fast. So the whole point of these systems and approaches, modern approaches, is to make them as frictionless as possible. So we're less concerned about the adoption speed. We're more interested in how the mining companies can transform their underlying processes to, reveal much greater value.
So put it all together for us, Graham. Could you summarize it in a few sentences for our listeners? What do you want people to know about Sequent and what you're up to?
I think the summary, in 2025 is that we are in, from a business perspective, if you're an executive, you're in a world, as we are, that is facing, unprecedented volatility and change. And it's simply becoming impossible to forecast the future and therefore the future impact on your business. So that the appropriate business response to that as an executive, is to build resiliency and adaptability into your organization and not have ossified systems and processes that pin you down. And so what we're trying to build and bring to market here is the underlying capability that can deploy that agility and flexibility to enable mining companies to adapt quickly.
So you're going to be at PDAC at booth 829. And for those that are not able to make it to PDAC, what should they do if they are interested?
Well, you can hop on our website. There'll be some information you can access. And of course, always just reach out and contact us, and we'll happily get back to you.
Graham Grant, CEO of Sequent, thank you for joining us and sharing what you're up to at the company on this week's podcast.
Thank you.
And thank you once again to Sequent for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, some M&A, Equinox Gold to buy Calibre for $1.8 billion. And this is by a staff writer at mining.com. Equinox Gold has agreed to acquire Calibre Mining in a $1.8 billion all-stock deal that would make the combined company Canada's second largest gold producer. Under the agreement, Calibre shareholders will receive 0.31 of an Equinox share for each Calibre share. Equinox stock fell 3% to $6.60 on Monday in New York, giving the company a $3 billion market capitalization. Calibre shares were down 7% in Toronto, giving the company a market cap of $2.5 billion. The deal, expected to close by the second quarter of this year, will create a company with 9 producing mines, 1 mine under construction, and 5 projects across 5 countries. Equinox produced a record 621,870 ounces of gold in 2024 from 7 operating mines in Canada, the US, Mexico, and Brazil. And scrolling down a bit, according to the 2 companies, the new Equinox Gold has the potential to produce more than 1.2 million ounces of gold annually, with Greenstone and Valentine at full capacity, making it the second largest gold producer in Canada behind Agnico Eagle and a top 15 gold producer globally. So very interesting. And another headline, Anglo sells Brazil assets for $500 million, targets June to demerge Amplats. This is by Blair McBride at the Northern Miner. Anglo American has set a June deadline to demerge its platinum business and has agreed to sell its nickel unit for $500 million as the company's effort to focus on its copper assets gather pace. Anglo plans to sell its Brazil-based nickel business to China-backed MMG Limited subsidiary MMG Singapore Resources, the company reported Tuesday. The payment is to comprise $350 million upfront at the deal's close, up to $100 million in price-linked earnout, and a conditional $50 million tied to the final investment decision for the development projects. And here's a quote from Anglo CEO Duncan Wanblad, who said in a news release, quote, "The sale of our nickel business after a highly competitive process marks a further important milestone towards simplifying our portfolio to create a more highly valued copper, premium iron ore, and crop nutrients business," end quote. So China, through Indonesia, flooding the nickel market and then buying up assets on the cheap. And just to follow up on that, we have a column from Reuters via mining.com. China's grip on global nickel supply tightens with Anglo sale. Anglo-American sale of its Brazilian nickel business to China's MMG is a corporate win-win. Anglo gets to deliver on its promise to shareholders to simplify its portfolio and pockets up to $500 million. MMG, which is already a major producer of copper, cobalt, and zinc, gets to diversify into another metal and expand its geographic footprint into Brazil. It is also buying into the one part of the nickel market that is showing signs of price resilience amid a glut of oversupply. But it's not such good news for Western countries looking to escape China's tightening grip on the global nickel supply chain. Chinese companies already control around 75% of refining capacity in Indonesia, which has rapidly emerged as the world's largest supplier. And with 2 other Western producers looking to offload their nickel operations due to low prices, China's market dominance could yet grow further. So for all of the talk of securing the supply chain, more assets fall into China's hands. Continuing on, another interesting, somewhat related story. New Indonesian sovereign wealth fund to invest $20 billion in projects. This is Reuters via mining.com. Danantara Indonesia will invest $20 billion in a wide range of projects from metal processing to artificial intelligence, President Prabowo Subianto said on Monday as he launched the country's new sovereign wealth fund. So think about it. Indonesia has become a major processor of nickel, and look at how that country's geopolitical relevance has skyrocketed, I would argue, as a result. And here, instead of just like every other country saying we're going to invest in AI, they say we're going to invest in metal processing and AI. And metal processing is mentioned first in this article. It continues, at a lavish ceremony, Prabowo formally launched the Daya Anegada Nusantara Indonesia Fund, or Danantara Indonesia, which is expected to manage more than $900 billion worth of assets to help drive development in Southeast Asia's largest economy and fulfill his promise of boosting growth to 8% from about 5% now. Scrolling down, in its first round of investments, Danantara will put $20 billion into more than 20 projects in nickel, bauxite, and copper processing, artificial intelligence development, oil refineries, renewables, as well as food production, the president told hundreds of attendees, including foreign dignitaries, business people, and politicians. I mean, I've been saying it here, if you're the UK, if you're Canada, frankly, if you're Germany, I don't even know if it matters. You don't need to have the metal in your country, as China has demonstrated. Build the mineral processing. I don't see why they aren't building the mineral processing, at least alongside the AI investments, especially Canada, where so many minerals are already located. And in terms of cost, if China has to import copper from the Democratic Republic of Congo, which they do, as we learned earlier this episode, what happens if Canada has copper locally and their refineries and smelters are right beside it or in the same province? Could they make it cheaper? That sounds like a lower cost than China, in theory. Continuing on, MP Materials' fourth quarter loss beats Wall Street expectations. This is Reuters via mining.com. Rare earths producer MP Materials said on Thursday its fourth quarter loss widened due in part to higher production costs for the refining of the critical minerals, but the results beat Wall Street's expectations. Shares of the Las Vegas-based company rose 1% to $23.40 in after-hours trading. MP reported a net loss for the period ended December 31st of $22 million or 14 cents per share, compared to a net loss of $16 million or 9 cents per share in the year-ago quarter. MP produces rare earths concentrate at its California mine that it sells to refiners in China and elsewhere. It also refines rare earths in California. And finally, at its California refinery, MP produced 413 tons of neodymium and praseodymium, the two most in-demand rare earths during the quarter, nearly triple the year-ago period. As well, MP said it expects to begin manufacturing permanent magnets at its Texas facility by the end of 2025. So it's going to be interesting to see what happens on that. Another interesting headline, a little-known metal spikes as China-U.S. trade showdown hits home. This is Bloomberg News via mining.com. Bismuth, a little-known but critical metal used in defense industries, has spiked to a decade high after China added the commodity to an export control list in retaliation for U.S. tariffs. The metal, which is also used in automotive coatings, paints, and low-temperature alloys and castings, has surged 38% to $8.25 a pound since the curbs were imposed on February 4th, according to data from Fast Markets. The restrictions mean that local exporters must first obtain permission for overseas sales. After Washington imposed blanket 10% tariffs on all Chinese goods, Beijing's response included curbs on a suite of 5 metals covering bismuth, plus tellurium, molybdenum, indium, and tungsten. And here is a quote from Chen Qiqi, an analyst at MySteel Global. Quote, Chinese bismuth ingot exports are set to halt in the near term given exporters needed time to apply for licenses, end quote. Traders are hoarding the metal in anticipation of further price gains, Chen added. China is the world's leading bismuth supplier, accounting for 80% of output, and about 2/3 of U.S. imports came from the nation in recent years. More obscure metals getting a lot more attention these days, particularly for their military application. Continuing on, Chinese lithium company halts tech exports as trade tensions build. This is Reuters via mining.com. A Chinese company has stopped exporting a piece of equipment used to process the electric vehicle battery metal lithium. In the clearest signs yet, manufacturers are already implementing export controls proposed by Beijing. Jiangsu Jiuwu High-Tech told customers last month it would stop exporting a piece of filtration equipment known as a sorbent from February 1st, according to a source with direct knowledge of the matter and documents seen by Reuters. China is the world's largest producer of sorbents used to extract lithium from brines or other solutions containing the battery metal, although its market size can be difficult to ascertain given Beijing's reticence to share data, analysts said. Scrolling down, in the near term, any disruption of Chinese sorbent exports may affect plans by Western oil producers to extract lithium from their operations by limiting their technological options. Among them, ExxonMobil has studied the potential use of Chinese processing equipment at its planned lithium operations in the U.S. state of Arkansas, two sources familiar with the plans said. Exxon declined to comment. Koch Industries, the largest investor in Arkansas lithium developer Standard Lithium, agreed in 2023 to use sorbents from China's Zhan Lanshan New Material Technology in its North American operations. A representative for Koch declined to comment. And here's Brian Manell, CEO of TechMet, which invests in Western mining companies and lithium equipment producers. Quote, "We have to completely change the technologies and innovate in production and processing. And we have to do it without being beholden to China, which has a 20-year head start and controls the game." End quote. Finally, Francis Wedden, chairman of Vulcan Energy Resources, which has developed its own sorbent technology that it plans to use in Germany, said would-be lithium producers were lining up for help. Quote, "Over the past few weeks, we've gotten inundated by companies wanting to approach us and buy our sorbent and license the technology," end quote. Very interesting, and just a few headlines. U.S. Army Corps seeks to fast-track 600 projects through environmental review. This is Reuters via mining.com. Continuing on, Rio Tinto to decide future of Tomago aluminum smelter by mid-year, CEO says. This is Reuters via mining.com. And Jacob Stousholm said on a call, quote, "I certainly hope we can succeed in Tomago. I just can't provide assurance today. We are aiming for having clarity for mid-year." And the Tomago aluminum smelter would be in Australia. So, of course, with all of the aluminum headlines we're seeing, perhaps part of the reason Stousholm is waiting. Another headline, up to 90% of the LME aluminum inventories are controlled by one party. Data shows. That's Reuters via mining.com. And so a bit of a mystery there. Alistair Munro, senior base metals strategist at broker Merrick's, said, quote, "It seems a fair assumption to think it must be a physical trader looking for metal to fulfill a physical short," end quote. And the LME also said to Reuters, quote, "The LME is closely monitoring the tightness in these markets and has the necessary controls in place to ensure continued market orderliness," end quote. And final headline, Fortescue rethinks timeframes for green energy projects. Shares drop as profit dips. This is Reuters via mining.com. And the company said, quote, "Market conditions are uncertain, with the Trump administration instructing federal agencies to pause grant payments under the Inflation Reduction Act," end quote. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.37%. That is down 0.15% from last week. So quite a drop-off, actually, in yields on the week. In contrast, the UK 10-year gilt is yielding 4.57%, and that is up 0.01% on the week. Italy's 10-year bond is yielding 3.57%. That is up 0.02% on the week. The German 10-year Bund is unchanged at 2.49%, so no real move after the election. And Japan's 10-year bond is yielding 1.38%, and that is down 0.06% after a relentless rise over the last, 3 months. Turning to precious metals, gold is trading at $2,954.10 per ounce. That is $8 higher than last week. Silver is trading at $32.65 per ounce. That is 46 cents lower than last week. Platinum is trading at $961.10 per ounce. That is $34 lower than last week. And palladium is trading at $939.50 per ounce. That is $46 lower than last week. Turning to industrial metals, copper is trading at $4.51 per pound. That is 8 cents lower than last week. Iron ore is trading at $107.13 per metric ton. That is 30 cents higher than last week, so almost unchanged. Aluminum is a penny higher at $1.21 per pound. Lead is unchanged at 90 cents per pound, and really not doing too much in the last 3 months. Nickel is back below $7 at $6.99 per pound. That is 4 cents lower than last week. Tin is higher at $15.28 per pound. That is 46 cents higher than last week, so a bit of a move on tin. Cobalt is unchanged at $9.78 per pound. Lithium edges lower at $10.46 per kilogram. That is 2 cents lower than last week. Uranium continues to fall at $64.70 per pound. That is $2 lower than last week. And zinc edges slightly lower at $1.29 per pound. That is 2 cents lower than last week. Zooming out, gold steals the show while the rest of the precious metals edge sideways. Silver is still remarkably low considering what gold is doing. Industrial metals generally edge sideways, with tin being a standout on the upside and uranium being a bit of a standout on the downside, and nickel back below $7. And those are your metal prices. Coming up, I'm very pleased to welcome Jocelyn Douheret and Jonathan Lafontaine from the Ministry of Natural Resources and Forests at the Government of Quebec. We discuss the success of Quebec's mining policy, as well as its ambition to become a major hub in the North American supply chain, particular in regards to mineral processing, but also the mining of metals, as well as the circular economy and recycling of metals. A fascinating discussion. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome to the Northern Miner Podcast, Jocelyn Douheret, Director of Mining Policies at the Ministry of Natural Resources and Forests in Quebec, and Jonathan Lafontaine, Strategic Advisor for the Ministry of Natural Resources and Forests in Quebec. Gentlemen, welcome to the show.
Thank you, Adrian.
Thank you very much for having us.
Well, it's great to have you. Quebec, in my eyes, has always been on the cutting edge of mineral development in Canada, so it's always interesting to talk to both of you. And I've known both of you actually for over a year now, and it's been very interesting and enlightening. So Jocelyn, could you tell me about the Quebec plan for the development of critical and strategic minerals? What is Quebec up to?
Well, thank you, Adrian, for the question. We will go back in the days of 2019 and 2020 because it's the origin of the plan. At that time, we've seen the numbers produced by the USGS and the World Bank regarding the increase and the growing demand into critical minerals such as lithium, cobalt, nickel, graphite, regarding especially the energy transition and the digital transition. At that time, we realized the potential we had to supply those minerals, but the idea was how to organize ourselves and the sector to take advantage of that opportunity. So we decided to produce a plan. And the first thing we did some consultations with the sector, mining sector, with local communities, First Nations communities, other ministries and government bodies, research centers. All the stakeholders were consulted. And the result was we had a plan which was a consensus between all the stakeholders. That was the first step. So after the consultation, we came with a plan regarding four different orientations. First one was to increase knowledge because we realized we know that we didn't know. So we had to increase the knowledge in terms of geology, survey, and also processing, because it's a knowledge we have to redevelop. Most of the knowledge is not in Quebec, not in Canada, not in North America. So we had to work on the knowledge. Second orientation was about creating value in Quebec, not just only extracting minerals, but also processing minerals and create a strong supply chain. So it was a condition also for the social acceptability, because mining more is interesting if you create wealth in the province, and create wealth is through processing, secondary, tertiary transformation, and also including circular economy and recycling. So recycling and circular economy was the orientation 3, and orientation 4 was about raising awareness, because we've seen if we need to develop more the critical and strategic mineral sector, that means we have to communicate with people, communicate with communities, and also at the same time, we have to communicate abroad to bring some additional investment from strategic partners. So orientation 4 was about public awareness and also promoting internationally the plan. So that's the plan we developed. And of course, within the plan, we had some financial means to reach the goals. Not so much. We had at the end a budget of $130 million, Canadian $130 million, and mostly spent into programs, R&D programs, but also financial tools such as tax incentives to help with investment into the development of the projects. So that's what we did. And in 2020, we were the first in Canada to launch a plan. The federal government came 2 years later. And I think at that time, it was interesting because most of the people around the world were thinking about having a plan. And we've seen some countries such as France and European countries came to us because we were the first. And it was really interesting because it put the spotlight on Quebec at that time.
I'd like to say also that what's interesting with the plan in Quebec is that it wasn't just the Ministry of Natural Resources and the mining sector that participated in this plan. Other government ministries, other government agencies all sort of realized that that's the direction that had to be taken. So other government agencies developed their own strategies to go in that similar direction. And we felt that there was a very broad government action going all concerted in one direction. So even though it was spearheaded by the plan, there were lots of collaborations within the government and industry to develop in that direction.
Exactly. And we worked in close relationship with the Ministry of Economy, of course, which was developing the battery strategy at the same time. And we also worked, and we're still working a lot with the Ministry of Environment about regulations. And I would say that the plan shows a visionary and current government policies. So that's interesting. Thank you, Jonathan. Yeah.
It's easy to forget that only in 2020, how novel this sort of focus on natural resources was. Even 2019, 2020. I mean, it feels to me, as someone who's been in the industry and as a journalist since 2012, it's only in the last 3 or 4 years that we've really seen action. So it was quite forward looking at the time. So with all that in mind, I mean, the plan was made in 2020, I believe, or right? So now it's 5 years later. All sounds good in theory. How has the plan gone from, say, theory to practice? How has it come into action in the last 5 years?
Well, as I said, with all the programs we put in place in terms of R&D and innovation, all the incentives we put in place to stimulate the investment into a critical mineral space, we've seen some really strong results. Just in terms of mining projects in Quebec, we've seen an increase by 61%. In terms of mining investment compared to 2019 and the numbers we have in 2023, we've seen an increase by 91%. And talking especially about critical and strategic minerals, exploration and project development. In 2019, the investment was about $141 million. And in 2023, we reached $524 million. It's an increase by 271%. So just those numbers shows that what we put in place worked in terms of policies, tax incentives. Also, we should mention that in Quebec, we have a specific tools with Investissement Québec, which is the financial arm of the Quebec government, and they are here to share the risk with investors, strategic partners, and they did. So that means we're able to bring at the table some new partners, new investors, because we share the risk with them. We offer a really interesting business environment in general. And as Jonathan said, the whole government is working toward the same goal. And definitely it helps when you are from abroad and you want to come into play in Quebec. So we've seen some really strong results. And we should mention a result which is really amazing is, for example, the investment from Australian companies. Investment from Australian companies, especially in the lithium space, showed an increase by 1,300% between 2019 and 2023, and it reached close to $1 billion investment from Australian companies in Quebec. So that's interesting because we see that what we've put in place really worked, and we're quite proud of it.
There are other factors that help with that investment. So investments from Australia into Canada and specifically into Quebec are facilitated by the fact that we can have geology that is compatible. We have exploration programs that are complementary. They work together. So the understanding from the approach in Australia works in Quebec. So there is a lot of compatibility. There's a lot of technical compatibility, but also the environment is quite appropriate in the sense that a lot of jurisdictions are looking at electrifying vehicles. There's a demand for lithium that is increasing, that is projected to continue to increase. So essentially, the world needs more lithium, and you need somewhere that is open to developing lithium, and you need the expertise to develop lithium. So, as an example, there are a number of projects for lithium, specifically in Quebec. I think Quebec holds, by the count that we've made, approximately 50% of all lithium projects in Canada. So there is interest, there is openness, and there is collaboration that does exist in Quebec.
Okay, excellent. So we have seen a challenge, say, with battery metals being, fairly low in price. And so it's 5 years on in your plan. I guess, do you make a new plan now? Do you keep going? In a sense, where is this going? Do you feel the need to make a new plan? I guess, what are you guys thinking about right now as we are here now in 2025, 5 years later?
We're working on the next plan, of course, because even if we work hard and we put in place a favorable business environment, there are still issues we have to work on. We worked on processing. We should work more on processing because we've seen some real progress within the last 5 years. We need to do more within the next 5 years. Also, we have still to work on circular economy, which is something which is really interesting. And I will just underline that in the new Mining Act in Quebec, which was accepted by the end of 2024, circular economy is now part of the Quebec Mining Act. The words are in, not just words. It's a strong will to include sustainable way of developing natural resources that include recycling, includes mining residues valorization. So circular economy is now part of the vision in Quebec to develop sustainably natural resources. And so that said, we need to work also on that specific topic more in the future. We have to go on attracting new strategic partners. So yes, we work on the next plan. And you mentioned EVs and you mentioned also electrification of transport and energy transition. Of course, we see that there is a trend at the world level, international level. Of course, the way is not easy. There will be some bumps, but still, I think the trend is in, and we will work to follow the trend. Also, there is not only energy transition, there is also digital transition. And the needs for minerals at that level are going up and going further. For example, semiconductors is something which is really interesting. We're talking about a real potential here for Quebec and the supply chain. There is an innovation zone that was officialized last year in semiconductors in Quebec near Bromont. And that means this is a sector we will work on as well, because within the last 5 years, we've seen the North American battery supply chain taking place. We've seen some construction of factories, plants in Quebec, so that works fairly well. But now we will work on some other potential usage of critical minerals, and semiconductors is one of them. So willing to develop more, diversify the way critical minerals will be used. For sure, it will be into or somewhere in the next plan we're working on. Jonathan, if you want to add something.
Well, I would simply say that Jocelyn is perfectly in tune with critical minerals is not just EV batteries. It's high technology. It's the widespread application in the modern world. And I think what we've shown in the past 5 years and where we will continue to go is being a partner and a collaborator for all of the industries that we need today and in the future. So we will be a partner, a strategic partner, reliable partner for shared valued countries. And whatever technology happens to be there, if you need raw and strategic and critical minerals, Quebec is a reliable partner.
And there's a lot to be said for being a reliable partner these days. And I love the focus on processing. As someone who follows this narrative, it really seems to be a major choke point here in the whole metals sector, so to speak. Well, Jocelyn Douheret, Director of Mining Policy at the Ministry of Natural Resources and Forests in Quebec, and Jonathan Lafontaine, Strategic Advisor for the Ministry of Natural Resources and Forests in Quebec. Thank you for joining us and sharing what you're working on in Quebec, which continues to be, a cutting-edge place in how to actually develop a mining policy in North America and in the West.
Thank you.
Thank you very much.
And thank you once again to Sequent for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, go to sequent.com. That's SEEQUENT.com. And you can learn more about the operating system for mining companies that the company is working on. Also, once again, a big thank you to Jocelyn Douheret and Jonathan Lafontaine from the Government of Quebec for appearing on this week's episode. And thank you, dear listener, for continuing to support this program. If you're going to PDAC, give us a visit and feel free to pick up one of our complimentary copies of the Northern Miner newspaper. Say hi to the staff. They're always eager to talk to whomever might be passing by. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.